So hello guys, welcome back. In this one, I'll be going over POIs. So when it comes to POIs, we're gonna start from basic and then I'll go over which one I'm actually using. Okay, so first of all, most people are looking at POIs like this. So for example, the last buy. Okay, so this is the last buy before this sell-off. This will be called supply or order block. Doesn't matter how you want to call it. Now let's take the same price action like this. Okay, some people are gonna look at this point as a break block. Okay, so we're gonna use this one as our break block. You can also call it break and retest. And some people are basically just gonna use this level as a support and resistance level. And as you can see, every single one of them will be looking for sells after price taps into last buy before sell. Okay, so this last buy before sell. Same thing with this one and same thing with this one. All it matters where you're gonna use them. Okay, so for example, we have one POI like this, another one like this, and another one like this. Okay, so this last sell before buy. Same thing with this one, sell before buy, and another one like this. Okay, so we have three POIs like this. And if you're expecting the next candle to print a wick and go higher, you always want to choose the closest one. Okay, based off momentum, the price shouldn't go below the 50%. Okay, so you've probably seen the OTE, which would be, for example, this one. So I'm not using this level. I'm only using these levels for my continuations. So you always want to choose the closest POI. The best scenario would be if the POI is lining up with this Fibonacci level. Okay, so this is it, this one and this one. And this is basically it. As you can see, super simple. Everything should be mechanical and step by step if you want to be long-term consistent. We also have liquidity sweep as our POI. Okay, so some people would be waiting for high or low. Okay, so with this high, this low to be swept, and then they will look for reversal. Same thing with this one. They will wait for low to be swept. So for example, this would be the POI. So once we're going to take out the low, now we are in the POI and they're going to look for reversal. But if you really understand trading, you understand that liquidity sweep is basically just support and resistance rejection. Okay, so for example, we have this low, or we can look at the same price action as we tap into this support and resistance level. Now we have rejection and we should go higher. Okay, so let me show you an example like this. So for example, we have this high and now we're gonna sweep the high on the left. Okay, so let me put it like this. Okay, we swept the high. We have our confirmation, we have liquidity sweep, we have CISD or market shift, we even have like FVG. So this should be perfect setup for reversal. And I know that some people are teaching this as this is all you need to be profitable, but it makes no sense because you literally, let me show you, you literally trade in support and resistance concepts. Okay, so we tap into this resistance level. Now we have engulfing because this price action on a hot time frame is basically just engulfing candle. So let me show you. We have this bullish candle and then we have this black one. So if you understand price action, you know exactly what I'm talking about, because we have this blue candle like this. Then we have this black one. And as you can see, the same thing. We have market shift. And now they will be expecting pullback into FVG and go lower, but this is not how the market moves. So if you're using liquidity sweeps and you think that you are trading some godly concepts, you're just using some rebranded support and resistance levels. Okay, so let's go over what POI I actually use. Okay, so for example, we have this bullish candle and I'll be expecting the next candle to print a wick and go higher. So I'm just going to choose the closest continuation level. So for example, we can just take Fibonacci, mark this level as our continuation level. We also have this sell before buy like this. Okay, so this should be perfect level for continuation. And as you can see, we created fake BOS to trap sellers, for example, who trade liquidity sweeps. So we might have swept some high on the left. Okay, so there's the liquidity sweep. Now we have market shift just to induce sellers who trade these liquidity sweeps and continue higher, because as I said, everything is about momentum. And if you want to be long-term profitable, you want to use something with step-by-step mechanical rules. Okay, so I'm not going to go over the exact time frames and stuff like that, but basically, as I said before, you want to choose one candle that you're going to trade, and then based on momentum, you're going to try to catch the wick aka manipulation, to take the price higher. Okay, so for example, you can say the 30-minute candle. Okay, so let's say we have 30-minute time frame like this. We have these nice bullish candles. We have some continuation level on a low time frame. So now I'll be expecting price to create wick to the continuation level. Inside the continuation level, I'm gonna look for entry model, and that's it. Super simple. Okay, so hopefully it makes sense. I do not use any liquidity sweeps. I'm just gonna use the closest continuation level, maybe lining up with my Fibonacci levels, and that's it. Okay, so if you've got any questions, you can just DM me on Instagram or leave a comment below, and see you next time.